Hello and welcome to Business 360. I'm Archana Solanki. Here are the headlines we're tracking this evening. A late surge on Dalal Street on expiry day helped Sensex and Nifty end in the green. Banks lead the recovery. Mid-caps marginally outperformed the blue chips, even after SEBI warning Mutual Fund Association about froth in the mid-cap and small-cap space. Union Cabinet clears 3 semiconductor proposals. Tatas will join hands with Taiwan's PSMC to set up a 91,000 crore rupee fabrication plant in Gujarat. Tatas will also build an assembly and test facility in Assam at the cost of 27,000 crore rupees. CG Power's joint venture with a Japanese and a Thai company to set up an assembly facility in Gujarat also cleared. Brokerages wave a thumbs up after Reliance and Disney form a joint venture to create an $8.5 billion media behemoth in India. Jefferies say the deal will add 40 rupees per share to Reliance's value.
We would like to sort of ensure that this very dynamic startup ecosystem is not sort of burdened either by too much of compliance or by a lack of knowledge about what the compliance burden is.
Fintech companies want to understand regulations better and the government is listening, says DPIIT Secretary Rajesh Kumar Singh. After the RBI crackdown on Paytm, hints at digitizing KYC compliance along the lines of telecom companies selling SIM cards, asserts that simplification and digitization of rules is key for fintech growth. That's an exclusive. A Supreme Court warning on the high cost of healthcare procedures spooked the shares of private hospitals. Narayana Health Management warns that applying standardized rates for all services will be an Armageddon for private healthcare. Israeli forces claim to have struck 8 targets in Gaza in response to rockets fired towards Israel. Hamas says negotiations on a temporary ceasefire are ongoing, but also added that the gap is still wide. The United Nations says reports of children dying of dehydration and malnutrition in northern Gaza are horrendous. An Uzbekistan court sentences 23 people to jail in the marine biotech contamination case. This includes an Indian national who's given the harshest sentence of 20 years for bribing officials to avoid audit of marine biotech products. Government sources call his sentencing unfortunate, says the Indian government will do its best to support him. The Congress-led Himachal government looks to have averted a crisis for now. The Speaker disqualifies 6 Congress MLAs who voted for the BJP in Rajya Sabha elections. The Congress now has a comfortable majority of 34 members as the disqualification of 6 MLAs brings the Assembly's strength down to 62. All right, let's start with the market action. A late surge on Dalal Street lifted the Sensex and Nifty. Stocks were sulking until about 30 minutes to closing bell, but then a late rally lifted the sentiment. The recovery was largely led by bank stocks. Mid-caps managed to outperform the blue chips marginally, even after SEBI warning Mutual Fund Association about froth in the mid-cap and small-cap space. Shares of Reliance Industries gain in trade a day after the conglomerate clinched a landmark deal with Disney to form an $8.5 billion media behemoth. Reliance, along with Viacom 18, will own over 63% in the joint venture. Network 18 and TV 18 stock fell close to 5%. A quick look at how brokerages are reacting to the joint venture. Now, Jefferies said that the deal will add 40 rupees a share to Reliance's value. Morgan Stanley said that while earnings contribution of the new JV will be small for Reliance, it provides them a pathway to leverage on its digital platform, improve returns and monetization. And a big story this evening, the Union Cabinet has cleared 3 semiconductor proposals worth over 1.2 lakh crore rupees. Tatas will join hands with Taiwan's PSMC to set up a 91,000 crore rupee fabrication plant in Gujarat. Tatas will also build an assembly and test facility in Assam. CG Power's joint venture with a Japanese and a Thai company to set up an assembly facility in Gujarat has also been cleared. Ashmit, take us through the new projects that have been cleared and the implications.
Well, big announcements coming in from the cabinet. We understand that India is likely to say welcome to its very first fabrication facility or a semiconductor fab. India does not have one. This will be the first of its kind in India. The proposal that has been approved by the cabinet today. First up, Tata Electronics. Their proposal has been accepted by the cabinet, has been granted its approval. This proposal envisions setting up of a semiconductor fab in Dholera, Gujarat. It will entail a cost of about 91,000 crore rupees. That's the investment forecast. Interestingly, technology being brought in by PSMC of Taiwan. This entity runs as many as 6 foundries in Taiwan, has significant experience, and will be bringing in the expertise as far as this facility, this fab is concerned. One key point here, other than the fact that this will be the first semiconductor fab, the one key point is that they will be manufacturing chips that are 28 nanometers. The reason that's significant is because the complexity of making smaller chips increases exponentially, and therefore the expectation was that chips being produced here would be 40 nanometers and above. However, the chips being made here will be 28 nanometers. That's the first big announcement. The second, of course, was again a Tata-linked company, this one called TSAT. They will be setting up an assembly and testing facility. An interesting choice of location will be set up in Assam. The investments that will be put in here will be about 27,000 crore rupees. We understand that this will have an annual capacity, a daily capacity of 48 million. And finally, CG Power. This is the third key announcement. CG Power also, their proposal being granted approval by the cabinet. The technology is being brought in by associates from Japan as well as from Thailand. This will see an investment of about 7,600 crore rupees. This facility as well, this ATMP or testing and assembly facility, will also be set up in Gujarat. On that note, let's in fact go across to the Telecom, IT and Rail Minister Ashwini Vaishnav, bringing in these announcements and sharing more details on the cabinet proposals.
पहली कॉमर्शियल फैब भारत की बनेगी टाटा और पावर चिप ताइवान, इनके कोलैबोरेशन से धोलेरा स्पेशल इंडस्ट्रियल रीजन के अंदर बनेगी पहली सेमीकंडक्टर फैब। ऐसे 50,000 वेफर्स पर मंथ इस फैब में बनेंगे। इस प्लांट से साल की 300 करोड़ चिप्स बनेंगी।
All right, the big newsmaker this evening, Fintech industry wants to understand the regulations better and the government is listening, says the Secretary at the Department for Promotion of Industry and Internal Trade, Rajesh Kumar Singh. Speaking to CNBC-TV18's Shireen Bhan, Singh said that government has already created a mechanism for Fintech industry to understand the regulations better after a meeting earlier this week. Now, all this comes days after RBI cracked the whip on Paytm banks over non-compliance. Now, Rajesh Kumar Singh hinted at digitizing KYC compliance along the lines of telecom companies selling SIM cards. He asserted that simplification and digitization of rules is key for fintech growth.
The general sort of impression that we got from the fintech companies who attended that meeting was that they would like to understand the regulations better, which of course we created a mechanism for that purpose on the spot by the Honorable Finance Minister for a monthly meeting to update them and sensitize them about regulations. There were also suggestions about technical violations not being penalized and helping them to achieve compliance. That also we decided that, for example, you have a sectoral cap of an FDI of 49% and you go up and down because of market trends or investment trends.
Yeah.
There again we've been asked to sort of work with RBI to create a mechanism where we flag those and help them achieve a kind of a facilitated compliance over time, so as not to disrupt things further. So I think government is listening, and we would like to sort of ensure that this very dynamic startup ecosystem is not sort of burdened either by too much of compliance or by a lack of knowledge about what the compliance burden is. And that particular meeting, I thought, went off very well in the sense that there was a tremendous sense of reassurance that the fintech community got as a result of that meeting.
So if I may just ask you a last question on this. On the back of the conversations that happened, is there a feeling that perhaps regulation is stifling innovation, or there needs to be less regulation or less complexity as far as compliance is concerned?
The latter, I think. There could be always be some areas of compliance which could be simplified or which could be digitized. And I remember there was one specific sort of case that came up in that meeting, which was about KYC compliances and whether that should be digitized. And it was a little surprising, frankly, that it's not digitized in the banking space. Whereas when we take a mobile connection, for example, we do go through some kind of a KYC process, which is largely digital. So yeah, I mean, those are some of the areas where we could simplify forms, we could digitize the processes, and of course we could make people understand better what the regulations are. And I think the sense of that meeting and the instructions given by the Honorable FM was that we should work on, ensuring that combination of simplification and digitization in areas that perhaps have still remained untouched in some areas, but not in others. As a whole, I would say India has done a great job in digitization and creating a digital public infrastructure, which is really where the first mover is actually the government, and the private sector thereafter comes in and uses that infrastructure to develop use cases and benefit from it. But there could be areas or segments where that online servicing, digitization will still need to be done.
All right, that was big story that we were tracking on CNBC-TV18. Another big story that we are tracking is that the shares of hospital chains took a knock today on the back of the Supreme Court warning the centre over non-implementation of standard rates for services across all hospitals. The top court has warned that if the centre fails to implement standard procedure rates within a month, it will consider implementing the standardized rates applicable to the central government health services impanelled hospitals as an interim measure. As per a 12-year-old rule, hospitals and clinical establishments have to display rates for services provided and charge fees within the range determined by the centre in consultation with state governments. The centre, in its response, told the court that despite its efforts, there has been no response from the states. Now, my colleague Ekta Batra joins us now. Ekta, how's the hospital industry looking at these developments?
Thanks for that. Well, the big piece of news which has disconcerted investors in the past 2 days is that the Supreme Court has directed the central government to set standard procedure rates. Now, they have ensured there should be a notification of standard rate for healthcare procedures within a month. Failing to do so, the Supreme Court will consider implementing standardized rates as prescribed by the Central Government Health Services or the CGHS. Now remember that cash-paying patients basically pay substantially more than CGHS patients. Cash-paying patients are around 40 to 50% of private hospitals in India. And private hospitals are free to set procedure rates for cash-paying patients. So basically, there's no cap right now. Macquarie says that the CGHS rates are generally 40 to 50% lower than cash-paying patients. Viren Shetty of Narayana Health, who was talking to us earlier, said that it can range in terms of a difference anywhere between 20 to 60%. So that's the kind of rate difference that we're talking about. Now, what happens in the next 1 month, one will have to see. But Macquarie says that if in case there is a worst case scenario and there is a CGHS rate which is set for all procedures across private hospitals, then private hospitals' profits will drop significantly. Now, Viren Shetty was extremely vocal on this and said that it would be an Armageddon for private healthcare. There has to be a middle ground, and the middle ground is probably having price transparency, creating a study list of procedures. Rules do exist according to him, but they need to be enforced. Now, Macquarie says that they will be monitoring the government response in the next couple of days. Standardizing procedure rates is a mammoth task according to them. But the CGHS rates could probably act as a good reference point. According to them, both Apollo and Max have also in the recent past seen volume growth softening. So maybe those would be stocks to consider at this point in time in the context of this news. And other multi-speciality hospital stocks, which I spoke to a lot of analysts about, should be on your radar, especially those which have higher average revenue per occupied bed, which can go up to around 70,000 odd rupees as well.
We don't believe that mandating a common price for the whole country, and that too a price as low as CGHS, where you lose money on doing a lot of procedures, would be the way to provide the best quality healthcare around the country. The CGHS rates are applicable to private hospitals for CGHS patients. If you were to make it standard for everyone, then you're asking me to plan on the Armageddon scenario, where the entire basis of a private healthcare industry ceases to exist.
The entire industry as a body is also working with the government agencies on this. I'm sure we'll come up with a solution which is a win-win for everyone. Obviously, we understand healthcare is there is a lot of social pressure when it comes to healthcare. But at the same time, looking at the investment done in healthcare from a private player perspective, it is important to keep in mind the returns which we end up generating as well.
Pharma Secretary Arunesh Chawla said there are 40 greenfield PLI plants coming up across the pharma sector. Speaking to Parikshit Luthra on the sidelines of the ZWorks Smart Manufacturing Summit, the Pharma Secretary said these projects will be commissioned on the 2nd of March across different parts of the country.
We are going to, the Honorable Minister is going to inaugurate 40 greenfield plants manufacturing bulk drugs and medical devices. A lot of hard work has gone into it. The initial skepticism is being proved wrong. The PLI is changing the Indian landscape in a big way. And you will see it on Saturday when the Honorable Minister inaugurates 40 big greenfield plants manufacturing bulk drugs and medical devices that were hitherto entirely imported in the country.
All right, shifting gears now, medical devices major Medtronic has expanded its R&D facility in Hyderabad with a fresh investment of around 3,000 crore rupees. Speaking to CNBC-TV18, the company's global CEO, Geoff Martha, said that its largest facility outside the US will focus on software capabilities for its global products. Martha added that India could also become a manufacturing hub for the company to cater to the domestic market.
What we're doing here is a lot of mechanical engineering, electrical engineering, but the biggest capability that we have here is software. So a lot of our products have embedded software, plus these products now are connected, take a pacemaker, that is now connected to the cloud where we can analyze how that pacemaker is performing and make adjustments remotely. So a lot of that software is done here, and now we're also adding robotics. I think over time there's an opportunity for manufacturing. I think over time there's an opportunity to localize some of these products.
Top Amazon aggregator Tracio has filed for bankruptcy in the US. This is part of the deal with lenders to inject fresh capital and pay debt. The company said that lenders have agreed to shave off $495 million of its debt burden. Creditors have also committed to provide Tracio with up to $90 million in fresh capital. The restructuring support agreement will see its interest payments delayed for a year. And it's time for a short break, but coming up next, India asks WTO to re-examine its stance on moratorium on digital goods custom duty, emphasizes that it's against an extension, also expects the ministerial's outcome documents to cut cost of cross-border remittances. A special report from Abu Dhabi up next. Welcome back. There's another financial penalty on Air India. The aviation regulator has imposed a fine of 30 lakh rupees on the airline over the death of an elderly passenger who died due to unavailability of a wheelchair. The Director General of Civil Aviation has said that Air India failing to provide a wheelchair to the 80-year-old passenger who collapsed and died as he walked from the plane to the immigration area. The aviation regulator also issued an advisory to all airlines to ensure there are adequate number of wheelchairs available for passengers who require assistance during embarking or disembarking from the aircraft during their journey. The Indian government has asked the World Trade Organization to re-examine its stance on implications of the moratorium on customs duties on electronic transmissions. India also expects the ministerial's outcome document to cut cost of cross-border remittances. Abhimanyu Sharma joins us for more on this from Abu Dhabi.
India is hopeful that the WTO outcome document may reduce the cost of remittances from developed countries to developing and lesser developed countries. Now, India's proposal to ensure a lower tax and lower cost for remittances from developed countries is facing opposition from the European Union. The proposal is being backed by lesser developed countries and developing countries, and the EU's counter proposal is something which India is skeptical of. According to Indian government sources, there are fears that EU's proposal may keep the cost of remittances extremely high, since it's usually the developing and lesser developed countries which are the recipient of remittances up to 70%. Now, notably, a recent World Bank report had indicated that India was the largest recipient of global remittances in 2023. So clearly, any such outcome would be in favor of India. So it's a wait-and-watch situation as far as the WTO ministerial's final day is concerned at Abu Dhabi.
And with that's a wrap on this edition of Business 360. But before we go, the pre-wedding celebrations for Anant Ambani and Radhika Merchant have begun in Jamnagar. The small airport in the city is seeing a bevy of global celebrities, including Mark Zuckerberg, Bill Gates, Disney CEO Bob Iger will also be in attendance. Google's Sundar Pichai and Adobe's Shantanu Narayan have also been invited. The couple's pre-wedding festivities commenced with an Anna Seva, where Anand and Radhika, along with family members, served food to the locals. Bollywood too is making its presence felt in Jamnagar, with Salman Khan and Arjun Kapoor having made their way to the venue. More Bollywood stars are also expected to attend. We leave you with these visuals. Thank you for watching.